What if everything you thought you knew about the global financial order was suddenly turned upside down in a single, chaotic trading session? Hold on to your seats, because that exact seismic shift is ripping through the markets at this very moment, not originating from the usual powerhouses of Wall Street or the City of London, but from a nation whose economic engine is roaring to life with a ferocity that has left every single major analyst and financial institution absolutely stunned into silence.
The Vietnam Dong, often relegated to the sidelines of mainstream Forex commentary, has just executed a vertical ascent that defies all conventional trading algorithms and sober economic forecasts, creating a shockwave of panic and opportunity that is currently cascading through every correlated asset class from Asian bonds to Middle Eastern petrocurrencies. This isn't a minor adjustment or a simple market correction, this is a fundamental repricing of a national economy on the global stage, a dramatic surge that has vaporized short positions and rewarded long-term visionaries in a move that will be dissected in economics textbooks for decades to come.
The initial trigger appears to be a confluence of three earth-shattering events that hit the wire simultaneously, creating a perfect storm of bullish momentum that the market simply could not absorb without a violent upward revaluation. First, and most critically, the State Bank of Vietnam, in a move that was both brilliantly strategic and stunningly bold, announced an immediate and permanent shift in its currency trading band, effectively allowing the dong to appreciate against a basket of currencies by a margin that was triple any previous adjustment in its modern history, a decision communicated not with hesitation but with the confident tone of a nation that has pantuanol, of a nation that has an rukli, that has ein kilamli, it with hard sos. Second, and directly feeding into this newfound monetary confidence, was the simultaneous release of blistering Q2 GDP figures that smashed through even the most optimistic projections, revealing a year-on-year growth rate of 9.2%, a number that hasn't been seen in the Asian tigers since their heyday, powered by an unprecedented explosion in high-tech exports, semiconductor manufacturing, and a domestic consumer in third, and perhaps the most significant catalyst for the speculative frenzy that followed, was the unexpected announcement of a comprehensive and strategic partnership with a consortium of global tech giants, securing over $200 billion in direct investment for building the world's most advanced AI and chip fabrication hubs right in the heart of Hanoi and Ho Chi Minh City, a move that signals Vietnam is not just the 21st century. The immediate aftermath on the Forex charts was nothing short of pure pandemonium, with the USD-VND pair plummeting over 7% in a matter of hours, a move of a magnitude that typically happens over the course of several years, not a single morning, completely obliterating all technical resistance levels and creating a chart that looks less like a financial instrument and more like a cliff edge.
This violent repricing has sent a direct and unmistakable signal to every other emerging market currency, but the eyes of the world are now laser-focused on one particular, and historically volatile, asset, the Iraqi dinar. The psychological impact on the dinar investment community cannot be overstated. For years, the narrative has been one of patience, of waiting for a political trigger, but the Vietnam event proves something far more powerful, that a currency can indeed skyrocket based on tangible, explosive economic fundamentals and sovereign monetary policy, not just political deals. The parallel is already being drawn in every major financial chat room and forum. If Vietnam, a nation with a complex history and a developing financial system, can achieve this level of market recognition and valuation, then the possibility for Iraq, with its astronomically vast oil and gas reserves and its own slow but steady political stabilization, is no longer a fringe theory but a plausible, near-term eventuality.
The global search for yield in a stagnant economic landscape has just found a new epicenter, and the rules of the game have been irrevocably changed, forcing a frantic recalibration of every single emerging market portfolio on the planet and setting a dramatic, electrifying precedent for what is possible when a nation's economic reality finally catches up to and then violently surpasses its long-held market perception. Before we dive even deeper into the direct, undeniable implications for the Iraqi dinar, you need to do one thing right now. Hit that subscribe button and pound the like button until it breaks. The algorithms that control what you see are brutal, and by engaging with this video right now, you are ensuring that you will be at the very front of the line for the next crucial update that could directly impact your financial future. This isn't just news, this is a live financial event unfolding in real time, and staying informed is your single most important advantage. Now, let's get back to the analysis. The reverberations from the Vietnam Dong's historic surge are now creating a tidal wave of speculative pressure and frantic reassessment that is crashing directly onto the shores of the Iraqi economy, forcing a long, overdue, and brutally honest conversation about the intrinsic value of the Iraqi dinar and its potential trajectory in this new, volatile global paradigm. For the first time in over a decade, the long-held dream of a dinar revaluation is being discussed not in the hushed, hopeful tones of online forums, but in the stark, data-driven language of institutional Forex desks and sovereign wealth fund strategy sessions, all asking the same terrifying question: are we witnessing the precursor, the blueprint, for a similar seismic move in Iraq?
The immediate, knee-jerk reaction in the unofficial dinar trading markets was a sharp spike in buy orders, a clear signal that the retail and speculative investment community saw the Vietnam event as a direct validation of their long-term thesis, a proof of concept that a historically weak currency can indeed experience a non-linear, explosive revaluation when the underlying economic and geopolitical stars finally align.
This sentiment is now forcing the hand of the Central Bank of Iraq, which finds itself in an unenviable position, simultaneously needing to manage runaway inflation, maintain stability for essential imports, and now address a growing international chorus questioning why a nation sitting on one of the world's largest proven oil reserves has a currency that remains so profoundly disconnected from that fundamental asset value.
The pressure is no longer merely theoretical. The success of Vietnam has created a tangible benchmark, a high water mark against which every other emerging market, especially one as resource-rich as Iraq, will now be ruthlessly judged by the cold, unforgiving logic of the global capital markets. The key differentiator, however, and the factor that will ultimately determine if Iraq can follow a similar path, lies in the intricate and often frustrating world of political stability and legislative progress, areas where Vietnam has made generational leaps while Iraq has, until very recently, remained mired in stalemate. The critical passage of the federal budget law, after years of debilitating delays, now serves as the foundational bedrock upon which any serious revaluation discussion must be built, as it finally allocates the billions of dollars required for massive infrastructure reconstruction, economic diversification projects, and, most importantly, the technological modernization of the Iraqi financial sector itself. This budget is not just a spending document, it is a signal of intent, a declaration that the Iraqi government is ready to transition from a post-conflict state to a proactive, economically ambitious nation, and the market is just beginning to price in the staggering implications of this shift for the dinar's real effective exchange rate.
Furthermore, the quiet but relentless progress on the long-stalled oil and gas law cannot be ignored, as its potential ratification would unlock trillions of dollars in foreign direct investment from supermajor energy companies, investment that would flow directly into the Iraqi economy and create a demand for dinar that would completely overwhelm the current supply, a basic economic force that would make a significant upward revaluation
Necessity to prevent hyperinflation. The central bank's own international reserves have been climbing steadily, providing a formidable war chest to defend any new, higher exchange rate should the political will to implement such a change finally crystallize in the wake of the global shock from Vietnam.
The psychological barrier has been shattered. The question is no longer if, but when and how violently. A similar reassessment could occur for the dinar, and the smart money is now positioning itself accordingly, understanding that the convergence of high oil prices, political progress, and a desperate global search for the next Vietnam-style opportunity creates a powder keg of potential that is now more combustible than at any repeated style than at if Jacob English. I'll reread it. It looks like what's next is it is now more combustible than at any Peter. It's a powder keg of potential. The Ministry of Planning's recent and surprisingly optimistic projections for non-oil GDP growth are suddenly being taken seriously, with sectors like agriculture, telecommunications, and even a nascent manufacturing base showing signs of a breakout, mirroring on a smaller scale the very diversification that propelled Vietnam into the economic stratosphere.
The narrative is shifting from one of pure hydrocarbon dependency to one of a balanced, modernizing economy, and for the Forex markets, which are ultimately markets of perception and future expectation, this shift in narrative is just as important as the raw economic data itself.
The entire dinar ecosystem, from the street-level trader in Baghdad to the high-net-worth investor in London, is now operating with a renewed sense of urgency, a palpable feeling that a window of opportunity opened wide by the events in Southeast Asia is now available, but that this window will not remain open indefinitely as the world moves on to the next big story. What you are hearing is not a prediction. It is an analysis of a fluid and rapidly changing situation. To make sure you don't miss the next critical piece of this puzzle, I need you to hit that notification bell right now. Set it to all, because when the next update hits, and it will hit soon, you will get an immediate alert and be the first to know, giving you a decisive edge. Now let's move to the final and most critical part of this report. As we stand at this historic crossroads with the dust from Vietnam's market earthquake still settling, the ultimate question for every single person watching this is no longer about what has already happened, but about what happens next, and more importantly, how you should position yourself in a financial landscape that has been permanently altered.
The precedent has been set. The blueprint for a currency explosion has been laid bare for the entire world to see, and the undeniable lesson is that these events are not random acts of God but are the direct, inevitable consequences of a nation executing a disciplined, multi-pronged strategy of monetary reform, economic diversification, and aggressive global integration. The parallel path for Iraq is now clearly illuminated, a path that begins with the political stability cemented by the budget law, accelerates with the passage of the oil and gas law to unlock its true wealth potential, and culminates in a sovereign decision by the central bank to allow the dinar's exchange rate to reflect the staggering fundamental value of the nation it represents. The risks, of course, remain immense and cannot be glossed over. Any deviation from this path, any return to political infighting, any significant drop in global oil prices, or any failure to secure the massive foreign investment required for reconstruction could delay this process for years, trapping the dinar in its current range and dashing the hopes of millions.
This is why your strategy must be one of informed patience, not blind speculation, an approach based on verifying every piece of information against original data and official statements from the Central Bank of Iraq and the Iraqi Ministry of Finance, not on the euphoric and often baseless rumors that swirl online in the aftermath of an event like the Vietnam surge. The coming months will be critical, a period where every piece of economic data out of Iraq, every political statement, and every central bank auction will be scrutinized with a microscope for signs that the country is indeed following the Vietnam playbook, and your ability to interpret these signals correctly will be the difference between being a spectator and being an active participant in a potential financial renaissance. The global market's attention is a fickle thing, a spotlight that moves quickly, but right now, that spotlight is fixed firmly on the world of emerging market currencies, and Iraq, whether it is ready or not, is standing directly in the center of that beam, its every move watched, analyzed, and priced in by forces far beyond its borders.
The Vietnam Dong's surge was not an isolated anomaly, it was the first crack in the dam, a dramatic proof that the old financial world order is fracturing, and that new centers of economic gravity are emerging with breathtaking speed, rewriting the rules of wealth creation in real time.
For the Iraqi dinar, this is its moment of truth, a convergence of global precedent, internal political progress, and overwhelming economic necessity that creates a set of conditions so potent that to ignore them is to ignore one of the most compelling financial stories of this decade. The decision you make today to educate yourself, to stay vigilant, and to process this information not with emotion but with a clear, analytical mind will define your position in the financial landscape of tomorrow. The clock is ticking, the world is watching, and the opportunity for those with the patience and the foresight to see it has never been more real. This is not the end of the story. This is just the beginning of a new and incredibly volatile chapter. Your immediate action is required. Go down into the comments section right now and type verified intel. This lets me know you are committed to staying on top of this developing situation with accurate, original data. Then share this video with one person you know who is also following this story. We need to build a community of informed individuals, not a crowd of reactionary speculators. The next 72 hours are critical, and I will be monitoring the situation closely. Your engagement right now is your vote for more of this hard-hitting, original analysis. Stay sharp, stay informed, and I will see you in the next update.